Palisade Global Investments is pleased to present the Hard Asset Conference on Jekyll Island, with keynote addresses by Eric Sprott and Dr. Edward Griffin, author of The Creature from Jekyll Island. The event will be sponsored by Triumph Gold Corp, currently drilling its 100% owned Free Gold Mountain project in the Yukon, and by Mexican Gold Corp, just weeks away from publishing its maiden resource on its Las Minas gold project in Veracruz State, Mexico. Come join us at the Jekyll Island Club from October 19th till the 22nd. The event is limited to just 50 participants. Visit palisadeconference.com for more information. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today is a new guest to the program. His name is Chris Blasi. Amongst other things, he's been mentioned in Jim Rickard's book, The New Case for Gold. He's been a recent guest on the Max Kaiser Show. He's been on the Wall Street Journal, Market Watch, MSNBC, and NPR as an expert on the precious metals, and he's the president of Neptune Global Bullion Exchange. Chris, welcome to the program.
Thank you, Colin. Thanks for having me on.
You're the creator of something called the PMC Ounce, which is something I want to get to a little bit later in the program, but you're immersed deeply into the precious metal space, somebody who's been in the precious metal space for over a decade, and you deal with it day to day. So I want to start off by asking you, as an investor in the space or as a trader, timing is so important, and there's been a lot of bulls in the space for quite some time. Are you seeing anything in the near term or any events that have happened recently that give you a very bullish case for gold over the next 12 to 24 months?
Sure, Colin. So I take a very big picture, long-term perspective, and we are at a great time and an inflection point. And just let me elaborate that what I see is gold and the precious metals, but we'll just talk gold as the representative for them, is in a secular bull market that began in 2001. And secular bull markets basically run 20 to 25 years. There's three legs to them. The first leg of this market went from 2001 to about 2012. Then we had the pullback and consolidation that is characteristic of a secular bull market, a cyclical bear within the secular bull. And that went from basically 2012 to December 31 of 2015. And then starting in January of 2016, we've resumed the next leg. And as I said, the secular market has three legs. We're in this third leg now, from my opinion. And the third leg is always the most robust and will have the greatest returns. And also on top of that, to support that, there are so many trigger events that are happening geopolitically, macroeconomically, within our own country, politically and socially, that it's kind of imminent that in the next, 12 to 24 months, we will be in a very robust move up in gold and the four precious metals.
Chris, let's talk about some of those trigger events. I think one obvious one to jump to is what you've referred to before the interview as price interference in the market, and the Fed is particularly responsible for that. Can you talk about Fed policy and any other specific things that you're seeing right now?
Sure. I think on a high level, you look, and our economy, and really the global economy, has not been allowed to correct for well over a decade. When things should have corrected in the early part of the new millennium, the Fed comes in and tries to stimulate the market. Right, their first big endeavor was basically trying to create a housing economy, and they did that by having banks basically lend to millions of unqualified buyers, ramp up the housing market, and then of course all the securities that got created from that, the CMOs and such, they all froze up and basically collapsed in 2008. And the Fed came in, and instead of letting the market clear itself and letting a lot of the banks fail and just protecting the depositors, the banks were propped up and the system was propped up. So this has been continuing now for 15, 16, 17 years. At some point, this system will break and it won't be able to be bailed out. A lot of very knowledgeable analysts on this also recognize this. So, that this interference with never letting a free market, clear the bad business and the bad securities, never letting that happen, is just setting us up for a much more monumental pullback and basically, collapse to some degree in the not too distant future.
I'm not sure how much time you spend analyzing the fiat currencies of the world, but certainly you've noticed that the US dollar has had a weak year for 2017, down some 10%. I think some people find it surprising that despite the dollar being down 10%, gold has not had a wildly fantastic performance this year. It's been a decent performance, but that also has some gold bulls worried that if the dollar bounces back, gold could really get smashed. Have you given any thought to that?
Yeah, that's always a threat. I mean, there has been a couple times where the dollar gold correlation has not worked out, where the dollar's rallied and gold has also. At the end of the day, all the currencies of the world, virtually all of them, of all the majors, are all just fiat currencies and all with the same underlying problems as the U.S. dollar. So gold sits at the top of the stack. Yes, there's always interference, but ultimately gold will win out. And that I'm confident of, and I think that will play out in the not so distant future, right? The next 18 to 24 months for sure. And I think there could be some very short term price pressure on gold with a rally in the dollar. But I actually think going back to the trends, we are in the third leg, and gold was much more vulnerable to moves, positive moves in the dollar from 2012 through the end of 2015. I don't think they're going to be as destructive now. And the other problem for gold has always been, the physical market is different from the paper market, but the pricing in the physical market is still taking its cues from, the paper market. And at some point that will disconnect also.
Excellent. Well, I want to get into the PMC index and the PMC ounce. You're the creator of the PMC ounce, which is a patented product, and it's a very interesting product in that you've taken an ounce weight of metal that's balanced between the four precious metals being gold, silver, platinum, and palladium. Now, I understand that the idea of basketing certain metals together will give you a more consistent or less volatile price, but what's really the idea behind combining these four metals? Why is it beneficial for people who subscribe to the PMC ounce and own them?
Sure. So two things. The PMC ounce is one of the benefits is the blended return and the smoothing out of the volatility to the being in just one or two of the metals, which it does. It's capturing the upside of all the metals, of all four of the precious metals, and it's weighted in a very logical way so that the amount of dollars going into gold is obviously representative that gold is the primary precious metal, and the same amount isn't going into platinum and palladium. We have tools on our website at neptuneglobal.com such as the PMC calculator, that lets a client, go through a mock transaction of the PMC ounce. They get to see exactly what the pricing is, exactly what the allocation of the metals is. But that's part of it. The other thing is it has a patent because it's not what's always been in the market. It's not a fund. It's not a managed fund. It's not an ETF. We've eliminated that security, the financial instrument between the client and the underlying asset. So we've eliminated the counterparty risk associated with exchange-traded products and funds. It trades in real time, but what's happening is as the client buys and sells, the metals are being allocated and deallocated at the depository level in the client's name, with full recognition by the depository of who that owner is. There is nothing like that out there. So we've basically blended, as I said, the best of two worlds, owning the physical bullion with the ease of trade, pricing, transparency of like an ETF. And all the bullion, 100% of it is there. It's all confirmed by the depository, and it's all good delivery bullion. So basically, we've put together something that we feel is taking all the ideal characteristics of the traditional ways of investing in precious metals. And and it's not new. It's been out since actively traded since 2008, but the volume of business has been growing exponentially with the PMC ounce in the last 3.5 years.
Chris, palladium has been a very good performing metal against silver, gold, and platinum over the last couple of years, which lends credence to why you'd want to have a balance between those four metals, something most people don't have. But stepping back from that, I want to ask you, over the next 12 to 24 months, what is your favorite metal? I guess out of those four, silver probably is the most depressed right now.
Sure. So I actually take the position that market timing is futile, and knowing which metal is going to perform the best in the short to intermediate is really just a wild guess, which is exactly the whole reason for the PMC ounce. You can't market time. What we offer investors, and our recommendation is, some analysts may say, hey, let's, as an example, platinum's going to has a great driver that's going to drive its price in the next 12 months, and people may just pile in, and that's the wrong way to invest. The PMC ounce says, look, the metals do not move in lockstep. We do not know exactly when one metal is going to outperform the other, so we put together this portfolio. It's turnkey, and it's proven itself out. So as an example, in the last 5 years, the palladium has way outperformed gold, silver, and platinum, and virtually no individual investors are in it. So we kind of take that off the table. Don't try to figure out the ideal entry point for a metal. The PMC ounce kind of takes care of it for you. And as I said, no one saw and no one knew that over the last 5 years palladium would have outperformed, and the metals even just this year alone. I mean, silver's up a modest 19% since January of 2016. And gold's up 21% in basically that year and a half, and the PMC ounce is up 30%. And a lot of that is because of palladium. So, that's our offer, and that's how we feel the best way of approaching and figuring out which metal is going to outperform in the short to intermediate term.
Well, that's a very good answer. Excellent, excellent. Chris, I want to thank you so much for getting on the program with us today on Palisade Radio and sharing some information about the PMC ounce for our listeners. It's a product that I was unfamiliar with up until a couple weeks ago, and one that I find very interesting as a way to get some insurance against fiat currencies of the world and everything that's going on. Chris, your website is neptuneglobal.com, and you have a lot of information on the PMC index, ounce, and your company there. I'd invite all of our listeners to check it out. Thank you so much for coming on the program, and hopefully we'll get you back some point in the future.
Well, thanks a lot, Colin. It was a lot of fun, and hope to talk to you soon.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?